I just read and read and read. I probably read 5 to 6 hours a day. I don't read as fast now as when I was younger, but I read 5 daily newspapers. I read a fair number of magazines. I read 10Ks. I read annual reports, and I read a lot of other things too. So I've always enjoyed reading. I love reading biographies, for example.
Today, we'll discuss 7 books that Warren Buffett believes are essential reading for all investors. In the beginning of his investment career, it is said that Buffett would read between 600 and 1,000 pages in a single day. He still spends 80% of his day reading. Read 500 pages every day, he advised. This is how knowledge functions. Similar to compound interest, it increases. Although everyone is capable of doing it, I can assure you that few people would. So let's start with all the books that are recommended on the list. 1. Common Stocks and Uncommon Profits, by Philip A. Fisher. Philip Fisher is one of the most significant investors in history, and is widely recognized and admired. His investment principles, which he articulated about 40 years ago, are still widely accepted as gospel and are not only studied and used by today's financiers and investors. Since its initial release in 1958, this book has been a priceless resource. Fisher's principles, which are based on his buy and hold investment strategy, identify long-term growth stocks and their rising value using fundamental research. In a time when most investors and investing tactics fluctuated with business cycles, the book outlined Senior Fisher's 15-point method for discovering outstanding long-term growth stocks. Fisher's techniques were so impressive that a teenage Warren Buffett went to see him and subsequently adopted many of Fisher's strategies in his own stock selecting process. The goal of Phil Fisher's 15-point strategy is to evaluate a company's ability to sustain sales growth over a number of years, as well as its inventive and visionary management, robust profit margins, efficient sales organization, and high-quality management. Fisher likewise opposed over-diversification and, in his prime, tended to keep no more than 30 stocks. One of Buffett's business tactics that he adopted from Fisher was his "don't follow the crowd" attitude. 2. Business Adventures, 12 Classic Tales from the World of Wall Street, by John Brooks. Bill Gates, co-founder of Microsoft Corporation, requested Warren Buffett to recommend his favorite business book shortly after the two men first met in 1991. Mr. Buffett didn't miss a beat before picking this book, a collection of New Yorker articles from the 1960s, as Mr. Gates recalled in the Journal last year, and he also pledged to send Mr. Gates his own copy. This book's noteworthy and fascinating accounts are just as important for comprehending the complexities of business life today as they were then. Stories about Wall Street highlight the intrigues and erratic nature of the financial sector and are packed with drama and adventure. Whether he is examining the astounding market crash of 1962, the demise of a renowned brokerage firm, or the daring attempt by American bankers to save the British pound, John Brooks's insightful reporting is so full of personality and critical detail that one gets the impression that history repeats itself. 3. Where Are the Customers' Yachts? By Fred Schwed. This book, another classic from decades ago, pokes fun at some of Wall Street's pretenses. The tale behind the term involves a visitor to New York admiring all the beautiful boats in the harbor when he was informed that they belonged to Wall Street bankers. He made a foolish inquiry about the storage of the bankers' customers' boats. The answer: they couldn't afford them. According to Mr. Buffett, it likely delivers many very significant insights on the subject and is the funniest book ever written about investment. This book keeps enlightening investors about the realities of Wall Street by delivering sage contrarian advice and a realistic view of the world of investing, where brokers prosper while their clients fail. A light, fun read and something you definitely want to pick up to have a laugh and, more importantly, learn about the world of brokers and managers, so you don't lose your money. 4. Essays in Persuasion, by John Maynard Keynes. The classic book Essays in Persuasion by John Maynard Keynes is regarded as one of the top 100 books of all time. The writings in this collection portray Keynes' attempts between 1919 and 1940 to sway public opinion in order to change the course of events. Mr. Buffett has flagged this collection of writings from the noted economist both for the importance of its ideas and the clear way they're presented. The essays written touch on a wide variety of topics, including inflation, the gold standard, Russia and Germany, and the possibilities of economic growth. While Mr. Keynes is now known and in some quarters, vilified for his work as an economist, he also devoted a fair amount of thought to stock picking. Mr. Buffett has deemed him brilliant at both callings. Reading Keynes will make you smarter about securities and markets, he told Outstanding Investor Digest in 1989. I'm not sure reading most economists would do the same. 5. The Little Book of Common Sense Investing, by Jack Bogle. Mr. Bogle is the founder of the Vanguard Group and creator of the world's first index mutual fund, and while this slim volume certainly spends time extolling the virtues of index investing, it also explains why tangible business realities, like dividend yields and earnings growth, are more important than market expectations. For the record, Mr. Buffett himself has frequently said most investors are better off buying low-cost index funds. The Little Book of Common Sense Investing provides a detailed overview of two different investment options, actively managed funds and index funds. These blinks explain why it's better to your money in a low-cost index fund instead of making risky, high-cost investments in wheeling and dealing mutual funds. The Little Book of Common Sense Investing will demonstrate how to include this tested investment method in your portfolio while also providing in-depth insights and helpful suggestions. Additionally, it will alter the way you approach investment itself. It's difficult to invest successfully. It calls for patience and self-control. But it's easy. It's all about common sense, after all. 6. Poor Charlie's Almanac, The Wit and Wisdom of Charles T. Munger, edited by Peter Kaufman. For the past 50 years, Mr. Buffett has been in charge of Berkshire, and Charlie Munger, his vice chairman, has been by his side the entire time. Mr. Buffett hasn't been shy about crediting his right-hand man for a large portion of Berkshire's success, especially for rejecting some of Mr. Buffett's more foolish ideas. Mr. Munger is a thorough thinker about human nature and its flaws, and he frequently speaks about how investors might put themselves in danger. This book is a biography that charts Charlie's development from his impoverished Omaha upbringing to his extraordinary financial success. His Midwest upbringing gave him a solid foundation for his great journey. His philosophy on life, decision-making, learning, and investing is also summarized in the book. It discusses his unique way of thinking and his incredible work ethic, which are the two main reasons for his extraordinary achievement. There is a special Mungerisms, Charlie Unscripted section that holds a collection of scathing remarks he had made at previous Wesco Financial and Berkshire Hathaway annual meetings. This book also includes the talks and speeches that he had given in a specific 20-year period. It has a 10 talks section that covers a wide range of his interests that ranges from how one attains worldly insight to how his multiple mental models could be used for business. The book includes details of Munger's life, such as his childhood and upbringing, as well as a collection of his speeches at various events. The speeches provide advice and insights into the financial and investing worlds, along with the development of psychological skills and mental models necessary to make wise decisions and understand the world. 7. The Intelligent Investor, by Benjamin Graham. I am sure that if you are viewing this video, you are already familiar with this book. Investing in the stock market while lowering financial risks is the goal of the book. It emphasizes longer-term and riskier strategies. Graham places more emphasis on investments than on speculation. How to engage in value investing and how to stop Mr. Market from influencing your financial decisions are both covered in The Intelligent Investor. Buffett once stated, "Picking up that book was one of the fortunate moments in my life." Following his reading of it, Mr. Buffett enrolled at Columbia University to take Mr. Graham's seminars and eventually began working for him. Even now, Mr. Buffett is likely to reference particular passages from the book in response to inquiries about his investing philosophy. In The Intelligent Investor, the notion of margin of safety is finally introduced. Of course, the author situates this idea within the background of the 1930s Great Depression. The premise is that even if a company appears inexpensive on paper, you could still lose money if Mr. Market, who is irrational, continues to undervalue it. So a stock that appears to be on the verge of being inexpensive is inadequate. Then Graham advises having a larger margin of safety and purchasing it at a deep discount. It will also aid in promoting restful sleep at night. As a result of enduring the Great Depression, one's risk is reduced to the point where the potential rewards are also extremely constrained. This book about investments is among the best and most useful ones ever written. And that concludes today. Please click the like button if you liked the video.